How are we doing? Welcome back to another episode. Today we're going to be going over why fair value gaps stay unfilled. A good motto or thing to think in the back of your head. Conscious question to ask yourself. Are we breaking away from a previous gap? Right, as we're looking in our trade, are we breaking away from a previous gap? PDAs such as BPR, weak BPRs, and redelivered, rebalanced PD arrays cause breakaway gaps, and BPRs are seen sometimes, are usually as a breakaway gap. Not to overcomplicate redelivered, rebalanced, or weak BPRs, but they're just a piece of price action that is balanced. The market seeks imbalances, so this piece of price action should not be redelivered to. In the example below, we have the open of this candle. We deliver buy side, deliver back to sell side, and close with a really long wick. Our next candle, open low, and then delivers buy side, high, and then closes. We leave this fair value gap open, and we can predict that our next candle will wick down into the wick BPR and deliver higher. And once again, the reason that we won't wick all the way through and deliver sell side is because it's already been delivered and this piece of price action is balanced. SMTs as well also cause breakaway gaps as well as breakers in the time being right. Right, we have a perfectly discounted soup into a time discounted PD array. Right. If we're bearish and there's a breaker, right, in the same time there's an open gap above the breaker, right, and our order flow is bearish, so we have a fair value gap above with a breaker just below it, and you have to choose one. Choose the breaker, because it's often seen that this fair value gap above will stay open. The breaker will then continue us to deliver sell side. You can see that you can also add this on to our model 2, which is the high time frame fair value gap fill equals the low time frame fair value gap left unfilled. We're going to see that model here in a couple episodes, and we're going to keep in mind all of these when putting it into the model of why fair value gaps get left unfilled. Right, thinking SMT wise, we have an SMT into the fair value gap on one asset that leaves the correlated assets fair value gap left unfilled. You should always have a narrative for your turtle soup entry, especially if you expect to break away from the key level. In terms, you could think such as this: we are accumulating in a range, low time frame, while high time frame we are bullish. So we're going to be looking for a fake market structure shift to the downside to be able to catch a turtle soup. Price is balanced below this high probability order block rejection block that lays below our range. So there's no reason for price to deliver below the said order block rejection block low. Our order block in this case is also discounted in the high time frame range, so we should quickly dip into the order block after sweeping our low time frame range sell side, and then expand away almost the same way we did when we created the order block and rejection block. Right, as we sweep, we create the order block and expand aggressively. We're going to refer to this paint here. Keeping in mind the following: we are accumulating in a range, low time frame while bullish high time frame, right? We're looking for a market structure shift to the downside to catch a soup. Obviously, I just said all this, price is balanced below, blah, 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 right? So with this high probability order block and rejection block down here, there's no reason for price to deliver past it because we've delivered to the key area, created a low time frame breaker within our high time frame market maker model. So we should accumulate within this range, just break, right, with the order block created, and break higher. Same thing for the next leg. We accumulate in a range, low time frame while high time frame bullish, we look for price to sweep the low, and we see here, as we said in our previous, if we have a breaker and an open fair value gap below, we look for the breaker. It delivers to the breaker, leaves the fair value gap unfilled below, and we see we have a BPR to the left. You can also see wicks, see it as a redelivered, rebalanced, excuse me, or you can also see it as a wick BPR, which is pretty much the same thing. I just call it a wick BPR because, as you can see, I have a hard time saying RD, So we start accumulating in a range again. We have one asset that sweeps the low time frame range into the high time frame fair value gap, which also has another breaker, right? And it doesn't always look like this. We don't always just leave breakaway, breakaway. Obviously, sometimes we can come soup back into this breaker, back into this order block. We can even come all the way deeper into this order block, right? With this sweep of the low, right? We don't have to deliver from the breaker, but we can see us come into the breaker, react, and then get in. We can also soup the low and get in on the breaker with our stop below the breaker. And we can see we also expand quickly on the SMT, maybe chop, come back to the order block, then expand, and then go to finish out the market maker. Same way in a bearish scenario, we are delivering low time frame bearish, high time frame bearish, creating a accumulation range. We break lower, leaving these gaps unfilled, right? Just sweeping, maybe SMTing, delivering bearishly, as we have an IOFED here, because we don't come all the way up into the fair value gap. We break quickly, accumulate again, sweep buy stops, break down, accumulate, come into our high time frame PDA, break quickly and aggressively into our key area, sweep, reject, form a new swing high, swing low into our order block, react, create the breaker, so we now have a new swing high, right? So we have low, swing high, right? Swing low, higher high, swing low. Breakers formed, as well as our model 1 from the PDA. So we see, as we sweep the breaker, some people see it as sweeping this high, then reacting lower from this fair value gap. Just depends what high time frame market structure and order flow you're seeing. In this case, we break higher, break lower, come into this breaker and dig a little deeper, leaving this low time frame fair value gap open within this area. Excuse me. We then react because we are in a discount, right? We see within this range. We're well within our C, even with a higher time frame range, say with this low below, we are clearly, under in a discount looking for buys. And then we have the premium above. So we come in to our PDA in a discount, react to our order block, react aggressively, right? And leave the fair value gap open, break higher again, form another breaker, accumulate, have an SMT at the low, and then continue higher to finish out our market maker model here into our higher time frame gap. And we see this high would be a high resistance run, and see this one is as well. But with the market structure we have in front of us, we have this accumulation leg being with the high time frame fair value gap open, right? And obviously, you'd have to have more chart to know exactly this fair value gap. But even here, right, we form a breaker, react, and we see that we don't come into the fair value gap. We leave it unfilled, breaker to breaker, and then continue lower. So going to be looking at the NQ 4-hour chart here. And you can look at any time frame you want. Go look at your own chart. You'll notice any of these, right? Just obviously seeing what order flow we're delivering from, right? Obviously we're bullish. So we're going to be leaving breakaways to the upside. Obviously, with us being bullish, we're going to need to come back to a discount. So after key areas are swept, right, we'll leave breakaways. Sweep the high, right? Come into Monday, then Wednesday, right? And then get some volatility. Insane Wednesday, obviously looking for our weekly profiles on Tuesday, Wednesday, Thursday. But more into the breakers and breakaways, we see we're accumulating in this range, right? We sweep the low. We see that we don't deliver this breaker, so we look left. We see this breaker. And we don't quite dig in as well as this piece of price action from the left with a bigger fair value gap, right? Obviously on the 4-hour time frame. It's not going to be, right, the perfect thing to be able to catch this bottom coming into a Monday, right, with the long wick as well. And not every trade is going to be a high confidence one. So don't take it. We wick below. See we close within 50% of the wick. We'll get some more sauce on that in the rejection block video. Then we break higher, right? And then come back to the order block. As we react to this order block, we are in a discounted range. Leaves a breakaway gap. So we can see we've created a breaker, as well as our technical wick BPR. We dip a little bit below it, coming into our 6 to 10 a.m. candle. We see as we open into the next candle, we leave a low time frame breakaway from the balanced price range. As we see as we break away quickly from that balanced price range, good lord, range, we see that we create an order block with another high time frame breaker that we dip into, as well as our wick here from the left. We dip into the fair value gap that we left, right? And maybe lower time frame, we have a smaller FVG below these lows that can make it even more precise. But then we leave behind a 4-hour FVG. And as you see, we expand higher. We break above the high with the fair value gap and continue higher. Coming into the 6:10 a.m. candle, we create a wick to the upside, deliver buy side, deliver sell side, then close. We deliver sell side right into the high time frame breaker. We have a breaker and a fair value gap below. as well as a long wick. Where do we choose? The breaker. Breaker FVG, more probable. We wick, right, as we said, we delivered buy side, sell side, close, or more likely, we delivered buy side, or good lord, we opened, delivered sell side, open low, delivered buy side, high, and then closed. With the next candle, we dip into our balanced price range and quickly expand upwards. With the next candle breaking us higher, we form a range, wick higher, then continue to break lower. We look left and see if we can see anything. And coming this far left, isn't always the best, most high probability situation. Right, but we see how we dip into it. And so as we come into that area, right, we see that we had that low resistance to the left. So we're not quite have swept those highs, right? So at this 9 or this 8 or 6 to 10 a.m. candle, right, we wick into the breaker, continue higher, right, sweep those highs, sweep the lows, open with our 6 to 10 a.m. candle, and open with no wick, and deliver higher. It's harder to show price action like that, but you also see, right, come lower into our order block, deliver, come down, right into our breaker, deliver again. So obviously we're not going to keep going up. We got to deliver back down. We deliver to our breaker, right? This breaker, FVG, is in a discounted range. We react quickly with our London open. Or wait. Or no, I thought it was that candle, right? With our 6 to 10 a.m. candle. We've come into a key area, create the long wick, 2 long wicks, right? Come into our discounted order block and expand quickly. We can see as we're coming into this order block, we're coming into the 6 a.m. and then to the 10 a.m., creating this breaker as well. We fill the long wicks to and through, like I've said. Right, we see price to continue to rise very aggressively. We break above this high, forming a breaker, right? Where's our fair value gap? Here. And then we also have this fair value gap here. So we have 2 fair value gaps, right? This one lower, this one higher to the left, lining up with this one. Breaker, BPR, wick to the left. So we see we have our BPR breaker. We come into it, 6:10 a.m. candle, close, react bullishly, form another breaker, wick into the breaker, right? And then chop around, maybe SMT into this fair value gap and leave it open, and then continue higher. We deliver into our FVG that displaced us lower from this high, right? We have this high, this FVG, and then we do have this breaker, which you see we retraced from, but because we were bullish, right, higher time frame, delivering to a discount, or delivering from a discount, that's why we faded this fair value gap. Now that we're in a premium, we see us deliver from this FVG at the 6:10 a.m. candle. We deliver lower, higher, chop around, right? Maybe SMT again into the FVG at our 6:10 a.m. candle, right? We break lower into the order block. And you see at our 6:10 a.m. candle, we create low resistance, creating the breakaway, right? And I have this low marked because I know we SMT'd here. I'm pretty sure we did. I'll double check and make sure I don't sound stupid. But we'll continue on, right? After we deliver to a discount, right? Deliver our discount rejection block. We then, and see how this wick was too long, right? We filled it to and through after delivering to a premium FVG. We accumulate, manipulate, distribute. Okay, so as we're distributing, we see we create a wick coming into our 6:10 a.m. candle. We deliver buy side, sell side, coming into our breaker, right? And then we have the FVG below, which we don't make it to. Maybe SMT into it, always a possibility. Especially with it being the 4-hour candle, we could have liquidated this 4-hour candle low on ES. So then after we deliver buy side, sell side, this price range here is balanced. So we move our PDA up, and you see we quickly expand in the PM session. Right? And that's what I mean by the time is right also as well. We accumulate, right? We create this range. We break lower, with it being our 6:10 a.m. candle. We then wick up, deliver buy side, sell side, close, and then the next candle continues higher. We now have a wick BPR and continue higher. The time being up, you see both 6:10 a.m. candles. If we SMT at this low, the time's up for us needing to sweep this low, and we continue higher. As you see, we distribute through this high. Starts to get questionable, right? Obviously, we showed this redelivered, rebalanced price range to continue us higher, right? We continue, and with the time being up, we distribute through the high. After we create the high, you see we react to our breaker, deliver buy side, sell side, right? Maybe SMT into the high time frame FVG breaker, deliver, same type of candle but just a little bit bigger, right? Maybe SMT to liquidate this candle's low into the breaker, right? You see how we go breaker to breaker, higher. We then accumulate, manipulate, right? Distribute lower into the order block, retrace, maybe SMT at the high, deliver lower, right? This breaker here has been delivered to, FVGs below, FVGs plentiful below, but what do we have? A breaker, touch the breaker. Sadly in our P, this is probably FOMC. No, it's the 31st. I could be wrong. Alright, we could have SMT'd at this 6:10 a.m. candle, right at this low, right coming into the rejection block. Right, we also could have SMT'd maybe at this low into the breaker again. Right, then you see this accumulation, excuse me, accumulation, right? We come into this piece of price action after we get a little bit of history to look after, since we're not, we've chopped around a little bit, not as high up. We see that we have broke higher, come back to the order block after creating a low time or a breaker, come back to the order block, deliver lower, right? And see we accumulated, we manipulated a low time frame but didn't break, right? No candle closer, no real manipulation for a 4-hour candle, right? So accumulation, manipulation, right? Then lower time frame accumulation, manipulation, distribution lower with the high time frame accumulation, manipulation, distribution. Sweep these lows, maybe SMT into these lows, deliver higher, retrace into the order block, right? After retracing into the order block, we break lower, right? Have this breaker. One of these candles some of these candles are small, right? But sweep into the FVG, deliver lower. And then you can also see our accumulation ranges of lower time frame market maker models into the high time frame market maker model here. Looking into this market maker model, right? Accumulation, smart money reversal into our breaker FVG with an FVG below. We leave this FVG open here, right? Because we swept, delivered, right? Order block, actually breaker, right? See how that's almost the exact same as everything down here. And so we see as we deliver, we range, right? Accumulate, manipulate, distribute into the low, breaker, come into the order block here, then continue to break higher. And within this range, within this time range, right? Or actually, sorry, within this range, we see that this is equilibrium, and then this is OTE roughly. So we see that we deliver to an OTE, right? Leave a breakaway here, low time frame. Well, obviously 4-hour time frame, but we deliver back into it because we deliver from this order block fair value gap back to the order block, and then deliver higher because of the market maker model and of bullish order flow continuing us higher. All right, get back to the notes and see if we can go over everything one more time and just try and pull everything together. Right, and with everything we went over, obviously if you don't understand basic ICT concepts, this video is gonna, it's probably gonna make you worse because you're gonna see all these little wicks and right, think everything is gonna be a breakaway and BPR, and right, it's not that often, right? Well, can't say it's that often because right, it's putting, I don't know, it happens often, right? Even low time frame, but you just have to understand how you're looking, right? It could be looking like I'm picking apart price action, but it's because I'm showing the best examples. But you can even go low time frame, right? Looking bearish, bullish, and that's how the market moves, right? We're going to sweep highs, deliver order block to order block, right? Have a piece of price action, lower time frame get balanced, and at high time frame be balanced, and it leave a breakaway gap, right? Or have the breaker to the left, right, be in a discount and us deliver to the FVG and then leave an FVG below. All right. So each piece or each trade and each right recap of a breakaway is independent. All right. As we went over BPRs, weak BPRs, and our redelivered, rebalanced PD arrays leave and look like breakaway gaps. Right. The BPRs are the breakaway gaps, and sometimes we see them retraced into But obviously, if you're in the trade in the like as the BPR is getting created, right, it's creating a breakaway gap while you're in the trade, all right? And so that's where you get the low time frame, right, stayed unfilled. SMTs leave breakaways, breakers, right, when the time is right. We saw when it was a perfectly discounted turtle soup win into a 9 or 8, geez Louise, into a 6:10 a.m. candle, right? If we're bearish and there's a breaker and an FVG, which one do we choose? The breaker. We're adding it onto our model too, and as well as always having a narrative, right, for our trades and for our breakaways. Always have a narrative and make it make sense. And not force it to make sense, but look at the price action and it should all, right, look like a piece of music. It should all flow, correlate, and just almost force you to make you be wrong, right? Anyway, thanks for watching. Hope everybody enjoyed this video. Hope everybody learned, a thing or two. Hope I could help out. Got the Discord in the bio, right? Accept any questions, any help you need there. Just come on in, ask a question. We trade in there as well every day. I'm in there trading. And I want to appreciate y'all for watching. Y'all have a great one.